beyond just understanding, picking a basic strategy, some other elements that you might consider and think about are how many assets are you including in your portfolio? What sort of view is that historical time period for the data? So, we're going to be constructing a bunch of metrics or statistics that are leveraged in for asset selection. So, understanding the historical time period or how much history you're including in calculating those metrics, that's important as well. And that's not something that the Main Street websites allow you to change or modify. A lot of them won't even tell you what they're using for calculating the returns, and it definitely makes a difference. Especially, you can browse through our testing, and you can see that the historical time period and which one is performing best changes over time. Sometimes it's a short-term view, sometimes it's a long-term view. So that's a factor that you need to consider. And then ultimately, when do you come back to your portfolio? When do you check back with it and potentially rebalance it or add or remove assets? A lot of people, it's popular to day trade, it's popular to buy these options trading programs and things of that nature. But the reality is, at least based on our testing, if you're trading more frequently than about once every 2 weeks, you're probably doing it too frequently to actually create any value. But that's also something that we test and we look into to validate that. Is that always the case? And lately, especially with the current market conditions, it's been pretty volatile. That has been the case. Is about every 2 weeks we see that they kind of hit that point of maximum return where it makes sense to engage in a transaction. Now, if the market's down, you don't have to. You can wait another 2 weeks to see what happens.